But at least they've been getting a lot of Q1 operational updates so far. We also have Abhishek Kapoor, the CEO at Puravankara, joining us to talk to us about their numbers, because the stock is definitely excited, up in double digits. Abhishek, hi, thank you so much for making time and speaking with us. Well, it's the second straight quarter that you've managed to report, pre-sales of around 1,000 crore rupees, and this is despite Q1 being seasonally weak. Is that the demand momentum which is so strong, and is it likely to improve as we, move into FY24 further?
Anisha, thank you for having me on the show. And you're right. I think it's a clear indication of what the brand is capable of delivering. In fact, we have only added one launch in this quarter, and we have achieved this kind of number, which is about 1,126 crores. And this is 119% over the last year's same quarter number, which was about 513 crores. And you're right, typically Q1 is a weaker quarter for most of the players. But what it shows is the kind of volume that the brand is able to move, both in terms of value and square footage. So if you look at it, for the first time, you're right, we have done a sequential growth between Q4 and Q1, while on a year-on-year basis, of course, the number has multiplied more than 2x.
Sure. No, Abhishek, that point is taken, but you talked about, how there was just one launch in the quarter gone by. Going forward, what's the launch pipeline looking like for the rest of the year? And does that mean that there could be an annual run rate of, 5,000 on the top line?
Okay, so I'll answer the first question. The first question is on the new launches. So that's about total of 14 million square foot. And of that, we have only taken about 700,000 square foot to the market this quarter. We have, out of 12, only one launch which is done, so 11 launches to come in the year, and therefore, and which is totaling to about 14 million, as I mentioned. So if you look at the numbers as they go along, we don't give forecast, or we don't give guidance, but I'm quite certain that the numbers will be fantastic. Last year, we did about 6 million of launches. This year, it's twice the amount. And as I mentioned earlier, most of the launches came in the Q4. So therefore, we believe that we'll be able to definitely continue with this kind of growth momentum that we have seen in the first quarter itself.
Abhishek, how are inquiries actually happening? Pre-sales is one bit, but before that too, the inquiry momentum is a kind of a lead indicator as well. And also talk to us about inquiries and response to the Chennai project which you have done in this quarter. How much potential does it hold?
Also, from what we have launched, we have already sold almost 45% of the inventory, and we believe that we should sell this project out in next 2 quarters. And as far as the general trend of demand is concerned, we are seeing great traction for the brand because our projects are really progressing very well. So the speed of construction across our sites, the delivery is really, really sped up. So you can see that also in the collections. I mean, if you look at the collections last year, same quarter versus this year, we have shown a total collections growth of about 52%, if I'm not wrong on the number. And that is a big achievement, because what is happening is, while you're doing pre-sales, you're delivering, your speed of execution, and then the confidence in the customer, and when he's seeing the product come about and the quality of product that is coming out, I think that gives a great amount of confidence. And of course, it also leads to natural appreciation of price, which also we have seen year on year and quarter on quarter basis.
The other thing which we are gathering from the industry is the kind of shortage of contractors of some sorts. Are you also feeling that? Because contracting stocks are also on fire here in the market, because the sense is that now they get to choose their partners. They get to have their pricing, in much more favorable kind of a term, which wasn't the case. Contracting historically has had very low single-digit margins, but that's a separate story. Talk to us about how are you facing that issue as well, the contracting part and the wages of people over there. Is that an issue as well?
That's a very, very good question. Not a lot of people don't understand this piece or don't ask questions on this piece. So, while we work with all the top contractors in the country, what's very interesting with us as a group and as a brand is that we also have an EPC arm. So we are pretty much hedged our bets, and we have a very, very robust risk mitigation plan in a situation like this, where our own arm, which is our own 100% owned subsidiary called Starboard, can take over and deliver projects. So we don't see that as a concern. While we work with all the top contractors, they bid for our projects, and so does Starboard. But we have an ability to scale up our execution and have no impact of such kind of market dynamics, which you're right, to some extent may play out in the market, and there may be some limitations. But in that sense, I think we have a great advantage because the organization has built that value already.
Just before we let you go, a quick last question. Now, with respect to the pricing, one part, of course, is the volume, and you're saying that it's seeing quite a bit of traction. In terms of pricing, how do the things stack up? And secondly, given that slew of launches, 11 you talked about in this year, what will it do to your borrowing?
So borrowing, there will be no impact. Let me start from that one. As far as the launches are concerned, what it will do is it will bring down my per square foot debt of area under development. What it means is my cost of interest and ability to service debt, and as long as the debt remains where it is, gets much better. So from the financial and cash flow and balance sheet and P&L point of view, this is great news as the times unfold and as we deliver, because the P&L reflection only happens when we actually deliver the project, right? So on the debt piece, I think it's only positive and great news. Of course, new acquisitions that can result into some incremental debt. But having said that, on a per square foot basis, on an overall basis, your coverage, your cash flow strength, etc., will only improve. So as far as debt is concerned, I think we are very, very confident and very comfortable with where we are. In fact, we've held on to the current levels for a long period of time. Also on the pricing, what we are seeing is that today the demand-supply gap continues, and ability to bring inventory into the market to catch up with the demand is still limited. And therefore, what we are seeing is that we will continue to see appreciation, but it's not just on account of demand supply, but it also on account of the fact that the pace of delivery, the quality of product that you are delivering is creating that premium in the marketplace. So I think what's very important to understand is that any project that you launch, from the date of launch to completion, normally in real estate goes through an upcycle of between 50 to 70%. So part of it, I wouldn't say it's just market, but part of it is just simply progress on the side and people's willingness to pay more because risks come down, project progress is fast, quality is fantastic. So those are things that contribute to price appreciation. So we see that trend continuing for us.
Abhishek, very quickly before I let you go, which category of your products are actually witnessing the highest amount of demand or inquiries right now? Till few quarters back, it was the premium end, or the higher end, the bigger BHK. Has the demand more broadened out or not yet?
No, demand is actually very broad. What I want to say here is that it's cutting across all our businesses, whether you look at Purva Land, Provident Housing, or you look at Puravankara. Though when you look at the detailed numbers, you will see that Puravankara has contributed 69% and Provident 31%. But that is more on account of availability of supply. But if you see volumes on a project-wise basis of Provident, in sustenance also it has shown improvement. What it means is that the demand is there, I don't have enough supply. So now in fact you will see with 7 million square foot we are going to launch in Provident. This year you will see significant contribution coming in from Provident as well, other than Purva Land and Puravankara. So, it's more a supply limitation than really a demand question. I mean, those days I think are for now not there.
Let's cross on that one, and on that optimistic note, Abhishek, we let you go. Appreciate you joining us in the show today. But from one management to another, we have with us Mr. Pawan Kirtan joining us from Quantum Papers. He is the Vice Chairman and MD there. Pawan, hi.